Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull, bear, point, and figure market breadth summary chart for January 6th, 2019. Market breadth. With this past week's market advance, our bull, bear, point, and figure ratio at 0.46 rose from 0.30 last week. The total count of securities in bullish or bearish patterns decreased 13% to 3,017. The count of bearish stocks decreased 23%, while the count of stocks in bullish patterns increased 19%. The Pirls PNF market breadth summary chart shows us a market now 16 weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. In order to receive the weekly Pirls Stock Market Commentary via email free of charge, simply enter your name and your email address in the spaces provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 139 points for the sixth advance in 17 weeks. At a negative 1,112.42 points, it continues below all 8 tops above plus 100 in the last 30 months, and it continues below 4 of the 5 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. The CCI 20 daily in a Woody's downtrend is now at negative 16.48, up from negative 64.73 last week. The CCI 20 daily is within the plus or minus 50 range, ready to form a zero-line reject entry point if it declines early next week. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 7 weeks ago, while the daily CCI 20 began a Woody's downtrend 12 weeks ago. The CCI 20 weekly in a Woody's downtrend rose to a negative 177.31 from last week. It continues outside the plus or minus 50 range required for a valid zero-line reject short entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and only 2 of the bottom 5 are negative. Summary: oil, oil services, S&P retail, and banking on the top. REITs and some tech on the bottom. Bullish, S&P retail and KBW Bank have entered the top 5. Gold and silver has left the top 5. Bearish, REITs continues in the bottom 5. Disk drives, CompTech, and computer hardware have entered the bottom 5. Brokers and disk drives have left the top 5. Oil services has left the bottom 5 and entered the top 5. Focus this week from www.thedailycoin.org. Markets, a look ahead. It's a big one video, in which Greg Marinaro explains his reaction to Powell's statement that unwinding the Fed's balance sheet is now, quote, flexible, end quote, as well as his expectations for the, quote, China trade deal, end quotes. Additionally, Mr. Marinaro states that the Fed and President Trump now appear to be on the same page, but that may be, quote, insufficient, end quote, to turn the markets around. Thank you for watching this week's Pirls Stock Market Commentary video featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl. www.s2pmarketsignal.com. For Pirls Stock Market Commentary, I'm Cynthia Pearl, hoping that you have been enjoying a peaceful and pleasant weekend, that you are looking forward to a productive and prosperous week coming up, and as always, wishing you true success.